10-year Treasury yields open up the week holding steady near unchanged from last Friday's settle at about 417, but now before making yet another run higher, falling just shy of that 420 level. Today marks 4 sessions that we've done that since going back to the middle part of December. We've come within a basis point during those 4 sessions, but didn't find any momentum to push us over that 420 level. So again, we remain as 420 the high going back all the way to December 13th. Today, closing at 417, near unchanged from Friday's close. Now, what does this mean for volatility? Well, check out that CVOL index over at cmegroup.com, and you will notice that volatility did nudge higher today, despite the fact that yields were unchanged, likely a nod to what's to come in the form of this week's inflation data. Lastly, let's talk about what we do have ahead. Tomorrow is Tuesday, which means we get the NFIB Small Business Index, but really all eyes are going to be focused on that CPI number that comes out tomorrow morning. Now, while the Fed has spoken about inflation moving in the right direction, it has yet to reach their 2% level. So while we talk about rate cuts and the Fed has been back and forth about that since January FOMC, it's been all about the need to see inflation continue to come down before the Fed would cut rates. Now, rate cut expectations are now put between May and June FOMC. Recall prior to last week, we had them set at March, but right now you're looking at about 70% odds that the Fed will cut 25 basis points at the May FOMC, and then we do have 100% odds that they cut by June. But ultimately, a lot of that hangs on what the inflation data tells us, and tomorrow we get a big piece of that via the CPI number. Oddly enough, there aren't any Fed speakers on the calendar tomorrow. It's the only day this week we won't have them. We have had Fed speakers pretty much every day over the last couple of weeks talking about the need to keep rates higher for longer until we get inflation back down to that 2% mandate that the Fed talks about. So opening up this week, we see 10-year note yields creep higher early, but fail to get above 420 before falling back to 417 unchanged on the day ahead of tomorrow's key CPI data.